What's going on, everybody? It's Sasha, your licensed real estate market expert here in Charlotte. Welcome back to the channel and welcome back for another monthly market report for the month of July. Even though it's August right now, we do this so we have an entire month of data compiled together so we have the most accurate information. Unfortunately, I don't have the best news. New listings are down again. Pending sales are also down. Our average sales price actually ticked down a little bit, but to counterbalance that, the median sales price actually ticked up a little bit. However, it's still down from our all-time highs. Now, before we jump into the stats, right now, what I'm personally seeing in the market is essentially a 50-50 split. Right now, everything is about timing. It always is, but now it just feels so more than ever. My point being, you see one house come on the market in a neighborhood, it'll sit on the market for 2 or 3 weeks. You have a similar home pop up on the market a different weekend, and that home sells within a couple days. So everything is seeming to be a 50-50 split between buyers and sellers. The interest rates are definitely not helping. The Feds just paused the interest rate increase. However, today when I looked at it, interest rates are still in the mid 7s depending on your credit score. So most of America has a 690 credit score. So with that credit score, you're easily going to be maybe in the mid 7s, maybe even more depending on some different factors such as down payment, for example. But in regards to what I was talking about, how it feels like a 50-50 split, in the last 2 weeks, I showed 12 properties to 2 different sets of buyers. These houses range from the mid 550s up to 850, and I'm going to post the screenshots here on both sides so you can see them. Out of the 12 houses that I showed in these last 2 weeks, 6 of them went pending, 50%. So that is another reason I'm seeing this 50-50 split. Out of those 6 that went pending, 2 of them were in multiple offer situations. One of the houses that was listed at $600,000 and the other that was listed at $679,000. Both of those were in multiple offer situations, so I'm curious to see what they're actually gonna close at. As far as that goes, I got a really good question from somebody not too long ago. Sasha, why aren't we seeing the new construction start to have price decreases? New construction is going to be the last set of houses that are going to see bigger decreases. A lot of the builders right now are being very hesitant and they're keeping calm and they're not wanting to overbuild. So they're doing everything very methodically. And the reason you're not seeing these price decreases for new construction is because the demand is still there, and with the partnerships they have with different lenders and such, they're able to offer really good incentives. I've got a couple of my clients' new construction houses a little bit under the asking price and on top of the new incentives, but a lot of the new construction builders are still staying very stable on their price, but they're offering a lot more incentives such as closing costs, rate buy downs, and even including blinds, maybe including more appliances and things like that. They're basically doing everything they can not to go down on the actual price of the home, so they're giving you a bunch of different incentives. Right now, I'm seeing this 50-50 split. I think it's going to continue. We got some interesting stats to go over during this video, so make sure you guys watch the entire thing. Make sure to subscribe to the channel, hit the like button, leave me a comment down below and let me know your thoughts. Like I said, it's a 50-50 split in this market and everything seems to be about timing. However, the demand is still slightly outweighing the supply that we have, so it is still more of that seller's market. However, as I mentioned, I'm seeing things a little bit differently on both sides. Right now, the last couple of years, not necessarily during the boom, but the last year to 18 months, it really hasn't been great for buyers and or sellers. Buyers, you have the high prices, higher rates, they just keep going up. Sellers, they don't want to sell. They have golden handcuffs. They have a good rate. Most of the time people are upgrading, so they don't want to sell when they have a 4 or 5% interest rate to get into a more expensive home, higher monthly payment, and a 7.5, 8% interest rate. So we're stuck right now. And right now there's kind of 2 trains of thought. If the interest rates start to dip down again, all hell's gonna break loose again and prices are going to skyrocket. On the other side of that, I personally think if the interest rates started to come down, we'd see a lot more new listings come to market because a lot of sellers would feel a lot more comfortable selling their home and then buying their new home. However, the Federal Reserve is not going to start decreasing these interest rates because once they start to do that, if the real estate prices start to go up again, inflation is gonna start to go up again and go through the roof. So these interest rates, in my opinion, are gonna stay very steady, if not start ticking up slightly until maybe mid 2024. but we'll see. With that being said, let's go hop into the stats with new listings. So in regards to new listings, we had 4,186 new listings in the month of July, and that is a 30.2% decrease from this time last year. And last month, it was a 28% decrease. So our new listings are down just over 500 less new listings than we had in the month of June versus July. The rates, everything snowballing together, our new listings are going down and down. And now that we're heading into the fall and winter market, we tend to see with seasonality even fewer new listings. So it's getting me a little bit worried, but I really do think we're going to see some really good opportunities here in the next 6 to 8 months. So if you're a buyer out there, have your pre-approval ready for when something does come up, and just stay ready. Now let's talk about pending sales, which came in at 3,877, and that is a 6.8% increase in pending sales from this time last year. And as opposed to the month of June, it's 14 less home sales pending. So we're not seeing that much of a drastic change, but the pending sales are down. Next, we're going to talk about closed sales, which is a stat that I really don't cover often, but in the last couple of months I have been, because the demand has kind of fallen off a cliff. And all in all, real estate transactions as a whole has been falling down drastically. Last month we were down just over 22% in closed sales, and this month we're down 20.7% in all of closed sales, and that's actually 14 less closed sales than we had in the month of June. Why does this matter? Because this is all activity, all real estate activity, buying and selling real estate. So Zillow and Redfin recently came out and said that their profit margins or their earnings are going to be down roughly about 10 to 15% due to this activity. So I'm not sure, but I really do think that this is an indicator of a slowing real estate market. Less transactions means all of these big companies, big venture capitalists are not going to hit their profit margins, which means their stock prices can tend to be going down. I'll tell you also, based off experience, I've had a lot of contractors reach out to me. I've had a lot of some of my different reps, and I've had a ton of new home builder representatives reaching out to me asking, hey, do you have any buyers? Do you have any people? Essentially asking for work, needing work. So we're seeing that the closed sales, due to all of this decrease, you're seeing a lot more people asking for more work that they didn't have to worry about. We're down a fifth in closed real estate transactions. So I think things are going to get even rockier here in the next coming months as far as real estate closed transactions. Now let's talk about the real estate prices, starting with the average sales price. The average sales price in the month of July came in at $476,000, and that is a 4% increase from this time last year. However, the average sales price from the month of June actually went down $9,000, which is very interesting. But guess what? Median sales price actually ticked up. The median sales price came in at $392,000, and that is a 1.9% increase from this time last year, and it's a $4,000 increase from the month of June. Everything is so out of balance. Last month was the first month that we had 3 consecutive months where the median sales price went down, but our average sales price kept going up. Now this month, our average sales price actually ticked down from the month prior, but our median sales price went up. Everything is completely out of whack, but as I mentioned before, I'm seeing a lot of the higher end, the luxury homes, the $800,000 plus homes. I'm seeing a lot of them sit on the market for a very long time, and I'm seeing a lot of them have some decent price decreases happening. And I honestly don't even wander off into the extremes of multi-million dollar homes, but this weekend I just wanted to see everything that was kind of on the market, so I didn't put a price parameter on it. There's actually a home in Huntersville that's essentially on its own like little island for $22 million. We're not in LA, we're not somewhere crazy. $22 million in Huntersville, North Carolina. Granted, you have your own little type of island and it's an absolutely amazing home, but for example, if that home sells, that home alone is gonna bump up the average sales price due to the amount of money that that home is selling for. So this is good to keep an eye on, but more importantly, just keep your eye on the median sales price. It's a very good indicator of where the market's heading. I think right now kids are gonna start going back to school at the end of August and early September. I think we're gonna start to see the median sales price trickle down a little bit. However, the market is still very steady. Now let's get into into days on market, which came in at 29, and this is a 93.3% increase from this time last year, and it's a 1-day decrease from the month of June. Just for reference, the more days houses sit on the market, the better it is for buyers. The less days a house sits on the market, the better it is for sellers. Right now, we're looking at about 29 days. However, that is on average. But a really good thing to take a look at was what I mentioned at the beginning of the video. I looked at 12 houses the past 2 weeks. 6 of them went pending. 2 of them had multiple offers. So that's a pretty decent indicator showing you how quickly homes are selling. Those other 4 that are under contract but didn't have multiple offers, they took roughly about 2 weeks or so to sell. They were in a little bit nicer, desirable neighborhoods, but definitely keep your eyes on days on market. It's a very telling factor where we are in the market as far as seller versus buyer balance. Now let's talk about the percentage of the original list price received, which came in at 98.3. That's a 2% decrease from this time last year. And essentially what this stat is telling you is that you can expect to pay 1.7% below the listed price of a home. This is going to vary depending on every situation. However, this is a good indicator on the average. So on average, you can expect to pay 1.7% below the listed price, but make sure you do your due diligence based off of the home that you're looking at and the home that you're wanting to pursue before offering 1.7% below, just because this stat says so. Last but not least, the dreaded months of inventory, which came in at 1.4, and that is a 12.5% decrease from this time last year and a 0.1 decrease from the month of June. The new listings were supposed to keep going up. Looking at things seasonally, looking at the stats that we had, initially they were supposed to keep going up. Now we're heading into the fall season in the next month and a half, and we tend to have even more new listings. So this number is starting to get me worried a little bit as we head into the winter market, but for some reason, I still really do believe we're gonna have some type of a shift in the market, and we're gonna have some opportunities in the next 6 to 8 months especially, and then potentially beyond, depending on what happens with the interest rates, depending on what happens with our economy. Hit the like button, hit the subscribe button, call, text, or email me anytime. All my contact information is down below. I'll catch you on the next one. Take care. Bye.